Hi, happy Monday from me and Achilles here. It was a very interesting week last week. We started with the OPEC cut. Didn't see a huge follow through on oil prices actually. I mean, we got the move back to 85, which we had essentially lost during the bank crisis. So we had a risk off airdrop down, by $10 or more, as much as a result of the banking crisis, even though fundamentally nothing changed in oil. And then, of course, OPEC came out with this genuine surprise cut, and we went back to 85. It was an interesting number because 85 is where we had been trading despite a lot of volatility in the dollar, and I was quite struck by the fact that 85 seemed to be in equilibrium before concerns about the bank crisis. But of course, the airdrop that we had also coincided with a significant reduction in open interest in terms of speculative longs. So essentially, the market got very short oil and was very ripe for a squeeze. And that's essentially all we got last week. We got a squeeze back to 85, but no follow through. Even after the weekly DOE data came in actually very bullish. So what we saw was draws across the complex, good looking demand numbers. Gasoline looks sustained strong actually going into summer, which is obviously key. Distillate bounced around like crazy, but last week's number was good. So US demand seems to still be holding up, even though everyone's terrified about what's next to happen to the oil market and the economy. The reality is that as we head into driving season, you'll see a natural increase in demand. Additionally, higher utilization at refining should squeeze the crude market. And so, I think the complex here is set up for a decent run into driving season. We're hoping for 100, which would be super bullish. Based on last week's action, it looks optimistic because we just didn't see that much additional follow through. But of course, we've still got more cuts to actually kick in, with the Saudis having nominated their volumes for April now, and reportedly having filled volume nominations with a higher price. We'll see where Russia goes from here, because they've come in with a relatively low number for March. And that, of course, has been the balancing item. And then if you combine that with recovery in China and things going well in India and the Middle East, with US demand naturally seasonally ramping towards summer, lots of gossip about people wanting to travel still, revenge travel as they call it, I think we should see a good summer here, and that should be good for the oils. And so we're back on, basically, I was on CNBC for the first time in a few months last week saying short Nvidia, long XOM, long Oxy, any oil basically. And that's going to be the theme, we hope, for the next 2 or 3 months as we run into driving season. And then we'll see where we get to Memorial Day, because if you fail by Memorial Day, basically it doesn't look good for the summer. So my longs are things like Oxy, Transocean, Rig. What else have I got here? EQT, we like the gas trade off the lows, and EOG actually, and Marathon Oil. So I'm pretty long oil leverage here. And on the short side, I'm short things like Sunrun and Rivian and more NASDAQ-y names. And that's essentially the way I'm positioned, with my fingers crossed, because of course it could all go horribly wrong with a muted inflation number this week. That'll be the big number of the week, obviously, will be what comes on with inflation. Now that will be flattered by oil prices having fallen during the month, whereas of course now they're in the upward ascendancy. Could be a double whammy. If inflation still comes in hot and we've got rising effectively pump prices and oil prices, the market could take that very badly. And not wanting to be a Grinch, but basically I'm hoping that the inflation number comes in hot, which should be good for oils and bad for the NASDAQ. Sorry. All right, there's one other thing, obviously, which is XOM for Pioneer. That's one of the oldest stories in the book. I'm sure they have had preliminary talks. The Wall Street Journal is very accurate on these things, and what it said is they're having preliminary talks, which obviously doesn't mean a lot. Pioneer predictably has spiked today, but is trading off. We do think that Scott Sheffield may want to perhaps, a very elegant end to his career would be to sell for stock to XOM. It's a good way to go out. There is, of course, the issue that XOM kind of sold the acreage to Pioneer in the first place. But that was a while ago now, and of course everybody needs the inventory, and I'm sure Exxon is confident that its performance in the Permian has been strong enough now that they could apply Exxon technology and engineering and general power to the Pioneer asset base, nearly 1 million acres, and really get some good results over the very long term. And I'm sure they've basically resolved themselves to remain huge in the Permian forevermore, sort of thing. It's interesting that they just actually exited more drilling in Brazil, apparently, which hasn't been a success for them and further adds to the pressure on their Permian position alongside Guyana as the future driver of the company. So it makes perfect sense. I just don't think it's going to happen in the next couple of months. I do think that it would happen fairly quickly if there was a significant downturn in oil, which, you know, is more likely to be in the second half of the year, would be a negative surprise. You don't tend to see major downturns in oil prices going into driving season. That's why we're bullish right here. Have a great day. Say goodbye, Achilles.